Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. I am here to bring you some upcoming selected trading levels for the week of October 26th, 2023. I'll be taking a look at a couple of the equity indexes, also take a look at the bonds, and lastly, a couple of popular stock symbols. So what we're going to do is take a look at some levels of supply and demand, which is the basis of our trades. And we will also look at, once we have those levels, ways of expressing a trade based on those levels. And I invite you to take some screenshots along the way and actually pop these into your platform and see how these square with how you look at the markets. Before we get going here, of course, the usual disclaimer, everything I'm about to show you here is for educational and informational purposes only. Precision Trading Labs, we are not money managers, we are not financial advisors, and again, everything we're presenting here is for informational purposes only. All right, so let's take a look at the SPY here, which of course is the ETF of the S&P 500. Here's where we closed on Friday, which is we're basically at 431.5. And so we're looking at the daily chart here. And this is actually an area right here marked in yellow, which is a level of demand. Okay, that's characterized by an area where price dropped into it, consolidated for about 3 days. And then notice we had this very, very bullish move that came out after a short period of consolidation, and then it continued up here. And so this is an area where, in fact, we anticipate when price returns to this level, this is characterized by this exhaustion of sellers. And so what we have left in here is demand, because supply and demand were in balance, and then they went out of balance here as nobody was willing to sell anymore. And so essentially this represents an exhaustion of sellers. And so when price returns to this level of demand, we can anticipate that there is likely still upward price pressure in here. And so when price returns here, we can anticipate a bounce from here. And so this is that description that I just mentioned over here. So we have a period of brief consolidation in a tight range. There was a clear, abrupt exhaustion of sellers in the range, okay? And then this energetic bullish move. And what happened essentially is the buyers ran up the price chart until they found willing sellers. And that's how all of these trades got created. So again, when price returns here, we expect that there is still some upward price pressure left that can be tapped. And that would be a way then of, once price returns here, there would be a number of ways one could express a trade out of this demand zone, which is listed right here. Obviously, one could simply buy the SPY at the front door of this demand zone at 425 and change. Okay, one could also buy a call utilizing this demand zone to time our entry, utilizing this region as where our entry would be, and then perhaps buy a call in the money, or depending on how you want to structure the trade, but utilize this as the trigger mechanism to get into the trade. In other words, wait for the retracement, wait for the dip back to this demand zone to express a trade through that. And then, of course, one could also utilize, one could also do a bull call vertical spread, where that would lower your entry premium by selling a call above by selling a call above the one that you buy at a lower premium. And that would, again, lower the net premium, and also make it a gentler trade, because that would reduce the delta on your trade. It would also reduce the effective time decay on your trade. So that essentially the bull call vertical spread is a gentler trade than simply buying a call. And then lastly, if one wanted to collect premium, one could utilize this level to again express the trade, and then do that by selling a bull put vertical spread and collect premium. And so one could essentially sell a put somewhere beneath the zone, and then buy another put further down, and that would both control and define your risk, as compared to selling just a naked put. And that's certainly our preference here. We actually like this level here a lot. Because there's a drop, a base, and a rally here. Structurally, we like this. And also, if you notice right beneath, this is the 200-day SMA, simple moving average. And so that's sitting right there, essentially almost as a more or less as a dynamic trend line behind that zone. And then right beneath here, and right really more or less coinciding with this, this is the daily lower Bollinger Band, which suggests that price is very stretched to the downside here. This is your standard daily 2.0 standard deviation Bollinger Band. So all of this, there's a confluence of all of this going on here, which suggests that this is a good buying region here. So right here, as compared to where we closed, that's about 1.5% down. That's a little over 6 S&P points down. So that's you can see 6 points down, a little less than 1.5%. And then similarly above here, there is an area of supply in the daily chart, and that's the same narrative of what I expressed before on the demand zone. That of course just basically stood on its head. So right here we have an exhaustion of buyers right here. So the buyers essentially left the building. The sellers ran down the price chart until they found willing buyers. And so right there was that very bearish candle, a gap, and then another bearish candle, and that continued on down. So again, the same narrative. We right here we expect that there could be most likely an area of downward price pressure that's waiting to be tapped when price returns to this region here. Okay, so because right now all we have is a supply up here, but there's no demand. There was demand here for a couple of days, and then essentially the demand disappeared by that exhaustion of buyers. So when price returns and there's still some supply left in here, we expect that there will be an area of downward pressure, that downward price pressure. And of course, again, we could express a trade there. And so for doing that, of course, one could short it, one could buy a put, and then one could do a bear put vertical debit spread that we talked about, in connection with the demand zone, except just, again, turned on its head. And then, of course, one could also sell credit in the same manner that I described before. Again, just the reverse here. So that's the story with the SPY. That supply zone here is about 2.5% up, about 11 SPY points further from where our close was on Friday. The one thing I will add here, though, and this sort of complicates things a little, but in fact, it actually bolsters the fact that I think this is a real solid zone for a bullish trade. If in fact if we get a little further pullback here, is that we actually have what's referred to as a level on a level here. We have a demand zone right here, a drop base rally here, and then over here, essentially we have a rally base rally here, which is right beneath here. So essentially we have this level on a level here. And so one could actually look at this as one larger level. And, it's kind of a chunky level, particularly in the daily chart. That's like 9 SPY points, which is why using options for a trade like this is actually is our general preference here, because that makes this trade a lot more manageable than trying to utilize, actually trade the stock itself or trade the ETF itself. So that's the story with the SPY. Let's take a look at the Qs, which of course is the ETF of the Nasdaq composite. So here's where we are now. Here's where our close was on Friday, 365 and change. Right here we have a level of support, and again we're looking at the daily chart here. So right here we have a level of support here. Right there was that red candle there, and essentially this was an area of tested demand here. So this was a demand zone here, a drop base and a rally here. Price has now been back here multiple times. This is no longer fresh demand, okay? But it's more, we would characterize this now as really a zone of support where price has been back here on a number of occasions. And it's bounced out of here, but I would not necessarily trade it, because with the way we look at things, the more often price comes back here, the less likely there is still residual demand left in here. So, but this is a clear area of technical support here. So in other words, right here we have a pivot from this red candle here, and then notice it's been back once and then twice. And so essentially that's confirmed, because now we have 3 points of contact in this zone here. So this is a level of support here. So I wouldn't really be looking to go long out of here. Up here, we have an area of supply. It was just barely kissed once before, but really probably most of the supply is probably still left in here. So one could, if we did get a pop here, this would be an area where one could express a bearish trade in the manner that I just described on the SPY slide here. If price starts to drop, I'm like I said, I'm really not in love with trading anything in here. So I would probably more kind of stick to looking at the SPY chart because of the fact that it's a lot cleaner. Having said that, as we know, a lot of times the equity indexes will kind of follow each other. There are certainly days that the Q and certainly days where the Qs and the SPYs are kind of very different, but a lot of times they will move somewhat in tandem. So you might just get a reaction if the SPY kind of hits its demand zone and it actually reacts cleanly to it. It's quite possible that the Q will bounce from here, in which case that would probably be off of this level of support. So it could be that this level of support could hold again, but that would probably be more of a consequence of really the SPY bouncing rather than this area of support holding. So I hope you follow what I just said there. So one could express a trade off of that. After that, then, like I said, there's really nothing nearby that I like in here. So, but I'm going to be looking at the SPY. The one thing I will also say though is the Qs. You can also look at the XLK ETF because that's the ETF of the tech sector. And of course, as we know, the Qs are a lot of the stocks in there are tech. So if you look at the XLK versus the Qs, in a sense, the charts aren't identical, but as I like to say, they sometimes rhyme. So if you look at the XLK and the Qs, you'll often find some of the same movement and a lot of times sort of analogous levels from one to the other. And of course, if you also the XLK on a per share price basis is roughly about, I believe, about 1/2 the cost of the Qs. So essentially, it's a less costly instrument to trade, whether you're trading the instrument itself or if you're trading options off of it. They tend to be, just because of the fact that you're dealing with roughly about half the share price. So you can look at the XLK while you're looking at the Qs, and more or less, a lot of times it's kind of a very similar looking chart. All right, so that's the Qs. Take a look at the bonds here. And so here are the bonds. As we know, the bonds have just been miserable between obviously the Fed, all the interest rate hikes, excuse me. And so anyway, here's where we are. There's our 52-week low. That's that pink cross there. And so I would not be looking to be a hero and try to buy the bonds here, the TLT. The TLT is the ETF of the longer term bonds, the 20-year plus. I would not be looking to be a hero and buy this here. On the other hand, if there is a moderate rally here, this would be a great area in order to express a bearish trade right here. If we switch right here to the 2-hour chart here, right here we have, let me just blow this up a little here. Right here you have basically right here a drop, this base area, but right here, if you notice that very bullish candle, and then notice that lamppost there, followed by that gap down here. This is a little area of consolidation, an intraday area of consolidation off the 2-hour chart. And so this would be a good area that I think one could express a bearish trade by either, of course, shorting TLT and of course, the way I described that before, we could, of course, buy a put or do those other strategies. In connection with looking at the TLT, though, one of the things that I would be looking for sort of guidance is also to look at the 10-year note futures. So one could look at the ZN futures, which is the 10-year note, which of course is the most liquid futures instrument in the world. And so one could look at that as guidance here. And with any luck, one looks at that and would hopefully find a level that's more or less at roughly the same distance away. And that would give us some confidence that TLT level is good by finding an analogous level on the 10-year note by looking at the ZN futures. So that's the story with the TLT. And then lastly, I'll wrap up by looking at a couple of symbols here. Taking a look at Apple here. And let me just bring this back to the daily chart here. Okay, so here's the daily on Apple. And so right here, we closed a bit below 179 on Friday. So here's where we closed. So on the daily chart, we have this nice rally base and a drop there, characterized, of course, by that very aggressive bearish candle here. And so that's about 5% up, though. That's about 9 points up on Apple. So, but these are the quality levels here. There's a level, there's that supply zone on the daily chart, which is up about 9 points, and then there's about 6 points below. There is this level of demand here on Apple, and this could also be probably refined a little using the 2-hour chart. So these would be areas again where I would have express a bullish trade out of here and a bearish trade out of this supply zone here. Right here, if you notice right here, there's a little notation 1H. That indicates a 1-hour level that I had looked at before. So if I pop this up here and we switch over here, notice right here there's a drop, a base, and then notice then that quick exhaustion of sellers that occurred right here that bounced out of here. So if we get the pullback into here, one could express a bullish trade out of here. Having said that, this would be more of a very short-term trade. Could be an intraday trade, or some kind of very short swing trade here. Might even be an intraday or a scalp trade. This is really not the quality level, though. Again, the level that I really like here is this one off of the daily. Okay, but again, this is one that one could. It's a little more speculative. But one could then utilize that for an intraday trade. And so where that would be is if I pop up the label here. So that's at around 177.15 and 175.75 here. So this is a level that's about $1.40 deep. I just spread that out just a little here. So here's the label that goes on that 1-hour level. So again, that's 177.15 and 175. Call that 75. So that's about $1.40 deep. So obviously a much shallower level based on a much smaller time frame. Okay, as compared to these other levels that are about $5 deep. All right. So that's Apple. If we take a look at Amazon, just slide that over again. So here we are on the daily chart here. So on the daily, I was actually looking at it. I don't think there was anything on the daily. I think everything that I found on this was like either in the 1 or a 2-hour time frame here. So let me change this to a 2-hour. Okay, so this is actually a 1-hour level that's right here. So notice right here we had a rally, a base, and a drop here. And if you notice that it's in the middle of this gap region here. And so there's that level up here, over here, and then right here. And this is actually a level I was looking at before. I don't really like it. And in fact, because this is an area where there was just a lot of trading back here. So in fact, I would really not even I'm really not even looking at that for really. This was an area of interest, but it's really not a level of demand here. So I think after that, then I would be more patient. And of course, this is a long way down. So that's about 7% down. So I'll have an alert set for this. But this is kind of a level that I would be looking at if we ended up getting a drop. But that's that would mean that Amazon's dropped from about 130 to about 120. But again, I'm not in any hurry to kind of take some substandard levels. And so if it starts to drop, I would just tend to be more patient. As we tell our subscribers, not every chart has a setup, and so for us, we're generally looking for quality levels and are willing to be patient and just look to other symbols while we're waiting on something from this symbol. So up here though, this is a decent level for a short. or for expressing a bearish trade up here on Amazon. And the last thing we'll take a look at here is Google. Okay, so right here, if I change this to the daily, okay, so right here's the daily. Right here we have, and let me just blow this up here. We have a rally, a base, and a rally there. Okay, price goes up. Now we're waiting for this thing to pull back, and so this would be an area where we could express a bullish trade. And so that's about a little less than 2% down, and about 2.5 points down from Friday's close. So this would be an area again where we would express a bullish trade. And then lastly, up here, okay, below this here, this is all support. This is an area where we can see price has been back and has bounced out of here multiple times. So that's an area of support there. And then right down here, there's actually a quality daily demand zone here, but that's a fair distance down. Just for perspective, if we extend this line right here, we'll see that this is down about that's a long way down. That's about 12% down. So frankly, if one's rooting for the market, we hope we're not going to visit that at any point soon. But we will be ready in case something does happen. So there's that area of demand, and then above here, this is an area of tested supply right here. Right here, we had a drop, a base, and a drop here. Notice price came back here, reacted to that. So that we had prior to this, early this spring, we actually had, or actually this was last year, in fact, we had actually had a nice trade, as I recall, that came out of here. So we have not been back there since. So at that point now, we were just back there again. So this is an area of tested supply. I would not be looking to short out of this again, because again, I don't really know how much supply is left in here. But right here, this little demand zone here, though, I'm actually pretty confident about. So that's an area we would be looking to take a bullish trade. So at any rate, that's what I got here. If you found this interesting, and particularly how we kind of identify these areas of supply and demand, I'd be delighted to speak with you. So if you look in our in the description here of in the YouTube, you'll see that there is a link where you can schedule a call. I'd be happy to talk to you about how we utilize these areas of supply and demand to create high probability trades. As well as good entries and exits for options trades. So at any rate, that's what I got. This is Mitch Firestone with Precision Trading Labs, and I will see you next time. Thanks for your time. Take care. Bye-bye.